Hey everybody, it is Chuck Barone on Monday, August the 12th, 2024. I tell you, time starts picking up once you get to August, right? Look at this, it's already the 12th now. It seems like the month just began. Anyway, here's your tired host back to my weekend of debauchery up in Reno. Lots of fun up there, just get away and hang out with some buddies. It was a nice weekend, but I'm back at the desk here and let's rock and roll. Before I get started, though, let me take a half a second, as always. Welcome everybody to the show, especially my friends on the pregame chat. Always good to see you guys on here. Much appreciated. We got it. Today was kind of a quiet day. Well, let's set this week up and go through what we can expect to be seeing coming up this week. All right. So, stock market today, guys. What a day! Truthfully, tomorrow we're going to get some numbers. The numbers are going to come weird this week, right? So tomorrow on Tuesday, and we'll go through all of this like I do every Monday, but tomorrow we're going to get PPI. So this will show producer prices. It's really weird because usually CPI they release before PPIs. So this time they're turning it around, which is a little bit different. Be very interesting to see where that comes, producer prices. And that will, of course, set up Wednesday, the big day, where we get the CPI number. And of course, that, with all the hopes on big Fed rate cuts coming, we'll see what happens with these inflation numbers. It's going to certainly go a long way toward market behavior this week. And then we'll finish the week, a lot of data coming Thursday and Friday. So it's going to be an interesting week setting up, especially after last week, which was so quiet for data. There was really not much happening. So anyway, the funny thing is all of the finance stuff, as I'm going through trying to find interesting stuff to talk about, finance and everything to do with anything is shoved out of the way now. It's all about the election. 1 million freaking different articles about the election and this guy and that guy and Trump and Kamala and now JD Vance and drag. Funny. And I mean, the crowds were AI produced, and it's just crazy nonstop in this election. It's only going to get worse, guys. So we got to kind of really dig a little bit to find any finance data. For these markets today, you can see where we're at. Basically, we're going to kind of be in a little bit of a holding pattern this until we get these inflation numbers. Now, depending on how things go tomorrow with this PPI number, it's certainly going to set up a huge day on Wednesday. And then Thursday, we'll get jobless claims and a whole bunch of slew of data coming on Thursday. So those are going to be the ones with where we have big market reactions to the data, especially if there's anything funky about it. So the stock market today, basically in a weird pattern, you had the Dow Jones Industrials fall 140 points, sitting at 39,357. You had the Nasdaq rise 35 points, sitting at 16,780, and you had the S&P basically unchanged. It was up about a quarter of a point. So the S&P still sitting 5,344. So again, there's really no reason to make big moves today in the market with what we have coming later this week. So the market's kind of trading sideways, maybe a little bit of positioning for your hunches on what you think the data is going to look like. That was really it. The bond market, same thing today. Bonds actually catching a bid today with yields falling. The 10-year falls 3 basis points, sitting at 3.90%. The 2-year also falls 3 basis points, sitting at 4.02%. So the inversion very narrow, just 12 basis points. And we know these numbers are going to change this week, depending on how all this data plays out. The dollar today, pretty much a neutral day, down just 3 basis points on the index, sitting at 103.13. So the dollar's kind of been in this, it was up a little over 104, came crashing down to right around 102, has bounced back up to over 103, and it's kind of been stuck there in a little bit of a holding pattern. So I'm sure the data, depending on how the data comes out this week, we'll see the dollar on the move too. Gold and silver today had a good day. Gold rallies up $40.60, $2,472.50 for an ounce of gold. Nice price for gold there. Silver rallies up 50 cents, $27.94 for an ounce of silver. Nice to see silver kind of moving back up, but I got to say I'm a little concerned it had its breakout and it has not been able to get back, even really approaching 30. We need to get silver up, guys. So hopefully we'll keep an eye on this. Nice to see gold make a big jump today. We need silver to start following behind with that. Oil today had a big spike, up $2.78 per barrel, sitting at $79.62 for a barrel of West Texas Intermediate. Again, remember, this is not a demand supply thing. Not. Only reason oil moving up today, tensions in the Middle East. We know the Israelis went and killed that guy in Tehran, so the Iranians pissed off, vowing retaliation. Apparently now satellite intelligence and the military intelligence showing that Israel is getting ready to launch this retaliatory strike, whatever it's going to be. The U.S. moving assets into the Middle East, not a good sign. And we'll see. You know, last time the Iranians launched their retaliation, they fired missiles and drones at them. And guess what happened? Barely any of them actually made it into Israel, if any at all. The U.S., the Iron Dome, everybody had their anti-missile batteries out, shooting these missiles down. So this one's going to be interesting. We'll see if actually Israel can make, or Iran can make Israel actually sustain a little bit of damage. We'll see. All right. Bitcoin today rallies up $455, sitting at $59,199. Bitcoin needing to get that big rally up over 60,000 and hold it. It's kind of the same way. Bitcoin struggling with resistance, same as silver is. We'll be keeping an eye on both of these, see if they can get their breakout done. Okay, so like I do every Monday, here's what we can expect this week. Today we'll get some data. I did not see it yet on Treasury numbers, deficit numbers. The deficit in July expected to be $241 billion freaking dollars. $241 billion deficit in July. It only pisses me off talking about that stuff, so let's just leave that there. Tomorrow we're going to get PPI. The producer price index. This is the wholesale level inflation. The top line number and core both expected to rise 0.2% month over month. That works out to about a 2.5% inflation rate annually. So we'll see how those numbers actually work out. On Wednesday, that's going to be the important one. We're going to get the CPI numbers, the consumer price index numbers. And just like the wholesale side, both the top line and the core for CPI, both expected to be up 0.2% this month. So we'll see, you know, these numbers now, that number there looks like a pretty neutral number, I would say. It's a number that's not going to upset the rate cutters, you know, the people that are expecting rates. And so the number's not so high that, oh my God, we might not get the rate cut, but it's not so low to, it's just like the Goldilocks number. So we'll see if it actually comes in that way, right? Now, Thursday, we'll start the real data blitz. We'll get jobless claims expected to come in at 235K this week. That's up from 233 last week. We'll also get the Philly Fed survey. We'll get retail sales, which are expected to be up. We'll get capacity utilization, which is expected to be down. Industrial production expected to be flat. We'll get business inventories, which are expected to be up. So big day of data coming on Thursday. And then on Friday, to wrap the week up, we'll get a little bit of housing and real estate data. We'll get building permits expected to be down. Housing starts expected to be down. And we'll also get the University of Michigan survey, which is a really important one because that'll give us a lot of data on where consumers are and where businesses are spending money. So big data week after last week's quiet week coming. Hopefully, a lot of this will lead to good things for these markets, lead to good things for us. Maybe remember, guys, the secret to it all, try to be as debt-free as you can. That's how you get financial freedom. You know, if you don't have any debt, you're not sweating interest rates, right? You don't have, and you're not going to take on any debt. Who cares what interest freaking rates are? Who cares about credit scores? Who cares about all that stuff that the whole world now is consumed with? You don't have to be. And that, my friends, is true freedom. You can get your paycheck and now you get to decide what to do with it instead of, well, I got to make my car payment. I got to make my car insurance. I got to make my cell phone. You have your list of bills every payday. Life will change dramatically without that. Believe that, guys. All right, so let's talk about some stuff here. All about data this week, guys. I think Warren Buffett kind of spooked the market a little bit, selling off as much stock as he has, selling half his stake in Apple, man. Wow. Bailing out of a lot of big positions. Going to be interesting to see. This guy is, I don't want to say he's always right, but he is way, way, way right more than he's wrong. So it's going to be interesting to see now the Buffett bet. Because if I was a betting man, if I was really in this market, but I saw Buffett was selling, I would certainly want to hedge some of my more speculative plays. Let's just say that, right? So all about data this week. A lot these as we just talked about Wednesday PP or Wednesday CPI, Thursday a dump load of data, and Friday's data going to tell the tale this week. It's going to be fascinating. Plus, I really have not read much yet about the treasury in the bond market this week. Now, you heard me complaining about it last week. I mean, I think they probably sold $150 billion worth of bonds. You had corporations in there, billions and billions of dollars in corporate debt being issued. So we'll see. That's another thing that could certainly affect the markets. If you have, even with the Fed cutting rates, if you have too much bond supply and not enough demand for that supply, they have to inch those rates up to get buyers, to attract buyers. So that could completely counteract everything the Fed is trying to do. Real estate rules changing, coming anytime now. I guess they're going to try and roll it out on August the 17th. They're trying to portray this as a good thing for real estate. It is not a good thing, guys. Basically, the story is, you've heard me talk about it here before. Traditionally in real estate, as long as I've been in it for going on 30 years and way, 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 way before then, the tradition in real estate was a simple one. The buyer gets a real estate agent, the buyer's agent. The seller gets a real estate agent, the seller's agent. The seller of the property typically pays both sides' agents. Okay. If you're selling a house, you want to sell your house. You don't want to burden the person buying your house with a lot of unnecessary costs, which could maybe dissuade him from buying your house, right? So typically all the realty fees for both sides of the transaction, typically 2 to 3% per side, was borne by the seller. Well, then came the big class action lawsuit. They felt like it was extortion. They felt like it artificially inflated realtor fees, so they did away with it. So now buyers are literally on their own as far as representation trying to buy a piece of real estate. And this is not going to be good for buyers, because what's going to happen is they're going to sit down with a professional, a real estate agent, and the real estate agent is going to want to talk about the services he gives, of course, and then they're going to talk about how the realtor is going to get paid. And ultimately, the realtor is going to explain he's going to try to ask the seller for money. He's going to do this. He's going to do that. But the bottom line is, if nobody else is going to pay, that buyer is going to pay 2 to 3%. Now, if you're looking at a $450,000 median price, let's just use 400 because it's easier to do math. That's $8,000 to $12,000 in real estate fees that the buyer now has to assume, right? And where is he going to pay that? In addition to his down payment, in addition to his closing costs, and people already are struggling just to come up with those basic numbers. Buyers, what's going to happen is buyers are going to try to hire realtors by the hour. They're not going to get any marketing. Buyers are going to try to navigate inspections for homes, appraisals for homes, contract language. They're going to try and do it without realtors. It's just stupid. Not a good idea. The sellers, I laugh. I was saying, if I was the attorney in that case, and those sellers were on the stand talking about how they were coerced into having to pay the buyer's fees, my first question would have been, when you bought your home, what were your fees? How much did you pay your real estate agent? Oh, the seller paid your agent for you. I get it. Okay, so When you were a buyer, the idea of the seller paying the realty fees was a good idea. But now that you're the seller and it's your turn to pay the fees for the person buying your house, now it's coercion. What a sad, sad story this is, guys. But anyway, so this all starts up on August the 17th. Another challenge for the real estate business, just what we need, right? Trump, you see Trump? I love this guy. Trump now arguing that the president should have a say on what the Federal Reserve does. Essentially, let's take away the independence of the Federal Reserve. Let's have the president setting interest rates because they have no biases or anything. You know what I mean? So remember I was telling you guys, Powell and the Fed are going to be very, very careful during this election cycle, guys. And Trump already going after them. I guess it's part of their Project 2025 thing. It's in there about how they need to take the independence of the Federal Reserve away, and the president needs to have a say in that. I got to say, I disagree with that completely. Tell me the president who's going to want to have interest rates raised. Show them to me. San Francisco Fed coming out with data today. Very concerned about consumers holding up. They're saying that dwindling savings, basically no savings. Credit stresses as people use more and more credit, try to get more and more credit. And you guys know how credit works, right? Let's say you have a credit card with a $10,000 limit. As you start to use that card, your credit score starts to fall. If you get up to 50%, so if you have a $10,000 limit, if you get up to $5,000, that is going to cause a very painful hit to your credit score. So that causes credit stress, which San Francisco Fed pointing out is not good for anybody. So now we got to see how it all goes, right? Not a good sign, though, because we know consumers are 70% of the economy. Companies, this is interesting. Remember I was talking about the Treasury in the credit market and the debt, in the bond market. Well, companies are doing that too. They said, listen to this, guys. Listed companies, meaning they're on the stock market somewhere, are expected now to issue $1.4 trillion freaking dollars in new corporate debt this year. Actually, they're already over 1 trillion, so the number could be exceptionally higher than that. So companies not bashful, trying to get debt out there now, which is surprising because they know rates are coming down. Maybe they just want to hold those bonds for the gain with the higher rate on them. I don't know, but crazy ass times, guys. Crazy times coming, and we know now it's only going to get crazier. We have we got a regular timeline of here's what the Fed wants to do. We're going to get data. We're going to cut rates. We're going to revive the economy. We have this basic timeline of what we're going to try to accomplish economically between now and the end of the year. Now you throw in all these X factors, wars, geopolitical crap, our election, which has been, let's say it, so far shaping up to be the craziest freaking election ever. And you add in all of these things that could change this timeline for so many X factors. This is going to be the most fun finish to a year that I can remember in a long time, guys, because there's going to be so many moving parts to it. I can't wait to see how it all plays out. Great election we're going to have. That's going to be fun to watch. Everything else we got to look forward to. That's it for the day, guys. Be back tomorrow. Tomorrow we'll start with PPI, so let's see what those numbers look like. It's going to be the start of another crazy freaking week on Wall Street and the good old US of A. I'll be here to bring you guys all the news you need. Guys, please hit the thumbs up button. It changes the algorithm around, gives us more views. We need to get those views in. Much appreciated. Thanks to everybody on the chat here, all my friends. I still have not mastered being able to look at the camera and then sneak a side view out to follow the conversation. I still have not mastered that. I apologize. But no, I'll be back again tomorrow. Thanks to everybody, man. I love you all. Tomorrow's another day. Let's see what we got. Until then, everybody, take care. Thanks.